Hello everyone. Today, let's understand the stock market, specifically why the Nasdaq and S&P 500 are weakening, why PayPal is surging, and why chip stocks like SanDisk are tumbling, in a simple way. First, let's explain what these terms mean. The Nasdaq and the S&P 500 are like big baskets that hold hundreds of different company stocks. Think of them as a scoreboard for the economy. When we say they are weakening, it simply means the average value of the companies inside those baskets is dropping today. Why does this matter? It matters because these indices represent major businesses that touch our daily lives. When the market moves, it often reflects how confident people feel about the future of the economy. Here is a household example. Imagine you have a chore chart for your house. If everyone does their chores, your household score is high. But if several family members stop doing their work, the score drops. The stock market is like that score. When big tech companies struggle, the whole market's score goes down. For ordinary people, market drops can feel scary. However, it is important to remember that the market goes up and down every day. If you aren't planning to sell your investments today, these daily drops are just numbers on a screen. For investors, these swings can be a chance to observe which companies are performing well and which are facing challenges. Now, let's look at the specific companies. PayPal is surging, which means its stock price is going up. This often happens if investors believe the company is making good choices or earning more money than expected. On the other hand, chip stocks are tumbling. Chips are the tiny computer brains inside your phone, car, and laptop. If chip companies face trouble, it can mean it might become more expensive or slower to get new electronics later on. One important point to remember is the difference between facts, possibilities, and opinions. It is a fact that these stock prices changed today. It is a possibility that these prices will recover tomorrow or drop even further. It is an opinion when someone claims they know exactly why the market moved or what it will do next. Nobody has a crystal ball for the stock market. Always be careful of anyone promising you a guaranteed way to make money. The stock market is essentially a giant room where people buy and sell ownership in companies. When more people want to buy, prices go up. When more people want to sell, prices go down. Today, we saw a mix of both. Some tech companies are struggling to meet high expectations, while others like PayPal are seeing a boost. In summary, remember that market changes are normal. A weaken simply means a temporary dip in value, and a surge means a jump. Whether you are watching the news for curiosity or to understand your savings better, stay calm and look at the big picture rather than just today's headlines. Market movements are just one piece of the puzzle. They reflect how people feel about companies right now. But they don't necessarily tell us what will happen in the long term. You for watching. Subscribe for more useful finance information. Thank you for watching.